Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, November 7th, and got kind of a late day today. But we do got one item here, which is Jolt's job openings report for the month of September. So back in August, it was at 6.09 million jobs openings, and the forecast is supposed to increase a little bit to 6.091, and it actually came in at 6.093. So a little bit better. More jobs are opening, which is obviously good news. We are starting to see, we have been for some time with regards to jobs. Jobs have been pretty strong, but economy is growing. We're starting to see more and more proof of that. Profit earnings are up in many of the industries out there, and with the new tax or new tax plans coming out, that could boost things even further. So let's kind of wait and see how things move along. But right now, everything is looking pretty rosy here. Let's go ahead and take a look at, sorry about that, at the headline news. The stock market started the morning up a little bit, and since it declined, the valuations are up pretty high right now. Earnings reports that came out were okay, but nothing really that would kind of push them upwards. So they're kind of waiting more information on the tax reform, and not much has come out since really last week. There's been talk over the weekend. They're trying to get some middle ground there. It has to go through Congress and Senate. Of course, each one's going to want their stamp on there as to what they want inside this tax reform bill that's going to be passed around. So it'll be interesting to see what the final revision will come out, how that will look like. Also, some bit of a news that came in. We got CoreLogic. They came out with their home price index. They had a 0.9% growth month over month from August to September of this year. For year over year, they showed 7% for the month of September. They're projecting a forecast of 4.7 going forward in the year. And then NAR also reported 5.47 million existing home sales for 17, and they are expecting to grow in 2018, grow by 3.7% to 5.67 million next year. That's their projections. So let's take a look here at the bond market. Bond market, we had a good day. We did close above the 100-day moving average. This is a pretty tough one, along with the 50-day moving average. We started the day up about the same, a little bit. We were up a little bit higher actually, but we pulled back a little bit. We're down about 2 points, but right now we're actually about the same pricing as where we left off yesterday. Pricing should be about the same. We got a tough resistance level here with this 50-day moving average, so be a little cautious here. They could could push us back down further here, and I don't know if this 100-day moving average, as it will be kind of a narrow pass. As you can see here, will be pretty narrow as to how long we can actually go sideways before we go either up or down. So let's look here at the Treasury, and the Treasury again down a little bit. We're about even where we left off yesterday. We started the day off further, but we pulled back and we're about this level of what we left off yesterday. We're still at about 2.32%. We're up against the 200-day moving average, which is a pretty tough one for the yield. So again, and like the other one, we're up against the resistance, and it could reverse course. So be cautious here if you are out there floating interest rates. You may want to look towards locking in a relatively quick fashion if things change for the worse. So rates again would be about the same as where we left off yesterday. All right, so that pretty much wraps it up for the day. As we mentioned yesterday, this week is pretty light. But if you guys want to get more updates throughout the day, just come over to Twitter. You can find me on my handle at Mike Bjork, and I do post more information out there as well. Hope you guys have a great rest of your day. Thanks so much for watching. We'll look forward to see you guys tomorrow. Bye-bye.